Hi again, my name is Grace Efilm and I remain your host as usual. And today we're going to be talking about why you need to de-risk your loan portfolio with insurance. And I'm not here alone as usual. I'm here with Debo Banjo, who is the CEO of My Cover AI. And I'll allow him to give us a brief introduction before we get into our conversation for today. Hi Debo, how are you doing?
Hi, Grace. I'm doing great. How are you doing too?
I'm very well, thank you. So
Yes.
just introduce yourself. They're used to seeing me every time and talking to me. Just give them a bit background about yourself, and then we can take the conversation from there.
Okay. Hi, everyone. Nice to be here. My name is Adebowale Banjo. I am co-founder, CEO at MyCover.ai. And MyCover.ai is an insurtech platform focused on building Africa's digital insurance infrastructure. And what do I mean by that? So essentially, we have identified the institutional voids and industry gaps that exist within the insurance space, and we are focused on building infrastructure, or let me say rails, that would enable the adoption of insurance by making it more accessible. So we have built an open API that allows businesses, individuals to embed insurance into their everyday offerings. So leveraging our infrastructure, um, buy now, pay later companies can embed insurance into their offerings. E-commerce platform can, so logistic companies can, ride hailing, property tech, and fintech as well. So essentially, we are making it easy for people to be able to access insurance. Beyond that, we are also providing robust infrastructure tech for insurance companies themselves to be able to streamline their processes and deliver better experiences for their customer. So essentially, that's who we are, and that's what we do.
Thank you so much for the warm introduction and background. We're going to get into more about insurance as we progress. Thank you so much, Debo.
You're welcome.
Okay, so we're going to start off with, as usual, we've cracked the code in lending and we're here to just simplify the lending process for every lender. A brief background about Lendsqr. We have a community that's aimed at bridging the lending gap and more than 5,000 plus lenders who are available on our platform. We exist across multiple channels. That's from mobile applications, you have USSD, pretty much Lendsqr is open to the world and we have endless possibilities for every lender available in 120 20 plus countries and still going. 20 minutes average time to market. This means that you can quickly come on the platform or board and get started instantly. We have 20 million plus customers and still building. Of course, our customer base exists all over the world. Let's take it to the next one. Introduction, which we've already done. Then we're going to talk about the evolution of insurance and finance, just a little bit of it. Then we'll go into integrating insurance with loan risk management. And then we'll talk about why my cover AI is the best solution for lenders. You heard me right. Then the Q&A session between myself and Debo, that's where you get to hear more from Debo, and as usual, the closing remark. We will talk more with the audience and then get the audience to drop their question. Please, all you have to do is use the Q&A session to drop any question that you have. You won't be able to drop a message due to, so that to avoid distractions. All you have to use is the Q&A. Click on the button, you will see Q&A, drop your questions there, and then we're going to pick it up there as well. Yes, thank you for raising your hand. Just drop your question in the Q&A session because you won't be able to speak, just so that the meeting is not interrupted. So we'll be going to the next one. I remain your host. And then, of course, we've spoken about Deborah. So the objective of today, what to expect, insight into modern trends in insurance finance. We're going to talk about the real world example of how insurance mitigates loan portfolio risk. We're going to have a presentation of my covered AI's capabilities as a tailored solution and an interactive Q&A to address specific audience challenges. We've put together some questions from our audiences prior to this moment, and we will be addressing each of them as much as possible. Yes. Did you know the average global non-performing loans as at 2022 was about 5%? This means that if you check the database, you will see that almost 5% of all the loans disbursed were pretty much consisted of defaulting, and it cost the banks and then the lenders billions, which was more like a whole lot. Right now, as of today, well, we'll still look at more about the data, but this was reported by the Global Economy. The evolution of insurance in finance. Here, I'm going to be comparing what we have for the early use of insurance in lending, and then compare with what the modern shift in insurance is when it comes to lending. Before now, lending institution, the traditional method was that you provide your collateral for anytime you want to take a loan. Say you want to take a loan, everybody is expected to provide either your car, a property, something to put against that loan before that loan is being given to you. Ideally, most people then didn't give out loans to people that are living far away, because if you're collecting someone's car, if you're collecting someone's property, you'd want to collect it from someone that you can reach. So lending was restricted to a certain range of people. You would not go outside of your community to give out loans to people that you cannot physically meet. Now, in the modern shift, you see that credit insurance has become like a key feature in loan packages. So now you're reducing the risk of default and also enhancing portfolio protection for each. That's for the lender side. While for the borrower, there's also some level of financial security for their families and the rest of them. Say, for instance, Grace is the head of the family, and then she goes ahead to take a loan, and then Grace dies. What happens to her family members? Her family members are left with a bill that they are going to use in repaying that loan. And if Grace is the head of the family and Grace is the one that is putting pretty much doing all the work to bring in the inflow that is supposed to use to repay the loan, almost like you're inheriting some financial debt that you cannot pay, which is why we have the likes of credit life insurance in this modern shift. So financial institutions now started integrating credit life insurance to address like stuff like that will address death, maybe someone is disabled or unemployment, things that are beyond life events pretty much that are beyond anyone's control. Before, insurance is used oftentimes for like only high ticket loans. Say a business owner wants to take a big amount of loans, and then that is when you now see them request for insurance. It wasn't practicing every loan. As of now, everyone is using this because nobody wants to put out money. You want to reach a wider range of audiences. And at the same time, you also want to de-risk your loan such that the loan that you're disbursing is also going to come back. The main aim of lenders going into loan is for them to be able to be profitable. If a lender is giving out loans and all of this money is not coming back, you would all agree that that is going to make the business not profitable, which in turn leads to a close down of the business. So that's where credit life insurance comes in. So the focus was also on a reactive approach, which means that they were focused on how do I collect the money rather than how to protect even giving out the loans, as against waiting for when there is a default, then you will not react to it. That's what we usually do before, but now everyone is thinking ahead. If I give this person a loan, what am I putting in place to ensure that the money comes back? Am I ensuring that, am I checking the person's eligibility? Is there any buffer for me? Is there any security for me as a lender, also for the borrower as well? If this borrower dies, what happens? That is where credit life insurance comes in. We'll be taking the next slide. Another version of Did You Know? Did you know between 2019 and 2009 and 2019, insurance companies' investments in corporate loans increased by 132%, highlighted a significant rise in this securitization of corporate loans. Before I went into the finance space, I didn't even think, first of all, if I hear loans, I will see it as a bad person, because I didn't think you could take any loan. I didn't just understand why anyone would not live according to their means. That was how I saw loans. So when people come and like, oh, I need a loan, I'm like, why can't you just cut your coat according to your size? Then getting into the financial space, realizing that that is how other people are operating. The only reason why more people are not out there giving out loans in Nigeria is also because the loans are mostly, you don't have a way of assuring collection. However, people are not, even when there are means of collecting all of these things, you have instances where people come on a platform, they're trying to get a loan, they're providing information that might not belong to them, and all of those additional stress that comes to giving out a loan. So I didn't believe in loans. I didn't think anyone should be taking a loan. I just felt like everyone that was trying to get a loan should actually not get a loan. If you are doing so well and living within your means, you shouldn't. So now think of it. If people did not believe in loans, they won't even want to do insurance. What's insurance? Um, You get a car, you're not insuring it. And the only ones that they do are the ones that when you go to do your registration, then the person registering now say, oh, let me do insurance, just pay extra 3K just to do the one for government. Then they will now do that quick insurance. If you even tell people, oh, I insured my laptop, they'll be like, really? So insurance is not something that a lot of people practice in this part of the world. Most people don't really believe in it because they keep wondering, why am I paying money to someone for XYZ if I'm not going to pretty much use it? But as things have been evolved, and as people have been more aware of what's happening around the world, we've come to realize that yeah, insurance does help to protect both you and the other people that are pretty much just using the solution or maybe buying properties and all of those things. I would not go without insuring my car. I got to learn that one the hard way. I would not have a device that is not insured that at least I've paid more than 1 million naira. I got to learn that the hard way. Let's go to the next slide. Current trends in insurance and lending. Hmm. Rising borrower demand secure financial products. So what are we seeing here? So now, as things have gone on, borrowers are increasing valuing loans. Like I mentioned before now, no one would hear I'm taking a loan and be like, that's a good thing. But with time, everyone has come to realize that having access to credit is majorly a big deal. It's a big problem. It helps solve solution. Imagine if you're trying to get an apartment, you are asked to pay a 2 years upfront payment for it. In other parts of the world, you can do the buy payments in bits. So you're paying monthly for your rent, and you don't have to think about raising the money. Anyone that wants to move into a new place, if you're moving into a new place, it's probably going to help you to work better. You'll be more focused, closer to the workplace. But you have to save money for over 2 years to be able to afford to be able to get the apartment that is meant to make you to work better, which in turn doesn't make a lot of people productive, I would say. So now everyone is more or less valuing loans. Everyone is more respecting that if I take money from someone, I have to repay so that I can be eligible for a higher loan, which means that there is more financial awareness. And being that now that more people are financially aware, it has also brought about how do you safeguard your families from unexpected debt obligation. If I am the one going to take a loan and something happens to me, what happens to my family 2 years from now, 1 year from now, 6 months from now, should anything happen to me and I'm not able to repay that loan? So people have increased the adoption of embedded insurance solution such that they will embed it inside or add it as a loan agreement. It's either it is part of the loan agreement or you can also use insurance in any other aspect of your product. And this trend is also powered by the digital platform like my Cover AI, which is why I brought Deborah here to speak with us, which integrates seamlessly with lending system. So the approach is just to boost the adoption rates of offering convenience for both the lenders and the borrower, while also fostering a secure financial ecosystem. So basically, you're more aware of loans, and your awareness should also bring safety as well. Hmm. This is one of my favorite slides. Integrating insurance with loan risk management. So pretty much this goes to talk about how it works and what are the key benefits of pretty much having insurance. So you have the risk mitigation, you have the improved recovery rates, you have an enhanced borrower confidence, you have regulatory compliance, and it works by loan protection insurance and interruption insurance, and also bundle product. So basically all this comes in play is that getting insurance does help both the lenders, and also the borrowers. So if borrowers are aware that the loan they're taking is also has some level of insurance, at that point, it boosts kind of like their confidence. They'll be more willing to take more loan. Oh, I'm going to go and take a loan from this lender. Why? Because they have insurance. I have a certain level of coverage for it. So I will take another version of Arduino. Businesses with insurance are 70% more likely to recover after disruption, ensuring loan repayments stay on track. Pretty much, if your loans are insured, 70% of businesses that have these they tend to recover here and there you hear, oh, a company has started, they folded up, this has happened to the company. But with insurance, 70% of those can actually recover from all of this disruption. Additionally, credit insurance adoption can reduce the lender's exposure by up to 40%. If I, as a lender, I know that when I give out a loan, 40% of that money is going to come back to me. That already gives me a level of assurance to keep disbursing loans. I mean, I want to make money and I'm in business to make money, not to lose the money that I'm investing in my business. We will take the next slide. And for this, we'll be talking about my cover AI. I will call in Debo to give us more information about the embedded insurance solution and all of those details, how my cover AI works before we go into the Q&A session. So my cover AI, founded in 2021, leverages technology to revolutionize Africa's insurance industry by improving access, reducing costs, and enhancing customer experience. So Debo, can I have you here? You're going to just speak towards how my cover AI actually provides these services to both the lenders and the users.
Thank you, Grace. So like I mentioned earlier while I did the introduction, right, we've built this infrastructure to our mission. Maybe let me start from there, is to provide financial security to Africans by improving access to insurance products, right? And when you look at this from that perspective, our own thought is, how do we get more people to get access to insurance products? Now, there could be direct to consumer channel, which we do. However, the more touch points that we can create with our infrastructure, the easier it is for people to get access to insurance products. So what we have done with our open API is to make it possible for almost anyone to be able to distribute insurance. So whether you have a digital platform or not, or you are just an offline business, you are able to leverage our infrastructure. So today, like I mentioned, if you are a fintech, you are a mobile app, a fintech app where people do payments and transfers, you can leverage our APIs to be able to offer not just credit life insurance, but health insurance, auto insurance, travel insurance, device insurance, and a whole lot more. So your customers who come every day for financial services now have access to insurance products on your platform. We do that for, like I mentioned, fintech platforms, buy now, pay later, logistics company, last mile delivery guys, ride hailing companies, prop tech, and many more. So the idea for us is to get as many people to be able to distribute insurance effortlessly. Now, on top of that is we've now built so you can white label this, so you don't have to have like my cover.ai displayed on your platform. It can be fully white labeled, where we are just infrastructure behind the scene, right? We also have no code tools. So in case you don't have like a robust engineering team, we have built these SDKs and insurance links that typically, once you just copy and paste into your infrastructure, appear like they are working from within your app, but it's all powered by us. And there are a number of people that are using that today, distributing insurance while we are just behind the scenes. And many people don't even really know that they are transacting through us. So for us, again, at the core of what we do is making it easy for people to access insurance. And we are partnering with as many people as possible that are looking to add more value to their customers, provide a well-rounded financial solution to their customers, and make more money for themselves as well, right, in terms of an extra stream of income. So that's what we do.
Thank you so much, Debo. Thank you so much.
Um,
So I'm still with you here. So can you briefly explain what credit life insurance is and why it's relevant for both the lenders and also the borrowers?
Okay, so simply put, right, credit life insurance is a type of insurance that pays an outstanding loan amount, right, that is borrowed to an institution that is borrowed from, which means if Debo, right, takes a loan from Grace, an institution, right, and Debo has credit life insurance, if Debo is unable to make that payment for some reason, which could be loss of job, could be permanent disability, could be temporary disability, could be critical illness, and could be death, then the insurance policy comes in and pays that loan to Grace. Now, that insurance policy does a number of things. One, It gives Grace that peace of mind, knowing that should, circumstances that I cannot plan for, because all lenders have like risk management processes in place. But
Mhm.
those ones are typically around the type of person you are lending to, the work that they have, and all of that. But when something that is beyond your control comes into place, like what we call the acts of God, right? That insurance policy comes into place to give Grace that extra confidence. Now, on the other hand, it also protects Tabor, because then Tabor is not leaving a liability to anyone else in his family, right, to address. And a lot of times when people go through bad times, survival is the first thing that comes to mind. And in that instance, your loan repayment goes to the bottom of their needs, right? But this way, they can still get their loan sorted while trying to bounce back and get their life going again. So that's what credit life insurance is. And maybe if I might just add, because of how important it is for every society to have a great credit system, right, where people have access to loans, either to acquire assets, to do their business, or to basically just build the ecosystem like small businesses do, then it is important to be able to provide a safety net for both lenders and borrowers, because the impact of that on the economy is then significant for everyone.
Thank you so much, Debo. I had already touched points on some of the things you've mentioned, which means pretty much it's not just important for only the lender, it's important for both the borrowers and also the lender, which in turns just makes everything more interesting. And I think if borrowers are able to know that, yes, the more I'm able, if I'm giving out this loan, it is kind of like secured, it boosts them in a way, pretty much boosts their confidence, and then they're able to just take more loans, which in turn just helps the lenders as well. So we'll take the next question. Why did my cover AI decide to offer this product as part of its offering?
Okay, this came more as a result of feedback from customers, right? So it was a request that our customers made, because primarily when we started, we had health insurance products, and we still have those products: health, travel, home, gadgets, and the likes, and auto. And then we had people who say, oh, I mean, I like how your platform works. I like the technology that powers it. Are you able to offer like business focused insurance products? And we did some research around it and found out that, look, in this environment where lenders are taking a lot of risk to lend, because it's not like we have the perfect environment in terms of data, in terms of infrastructure, to be able to enable lenders to lend and lend safely, which is one of the reasons why interest rates are crazy, because all of those risks and uncertainties have to be priced into the loans. So insurance coming in helps to reduce that burden and sort of de-risk it to an extent, right? Wherein lenders are now a bit more comfortable to lend to people, and then also the risk that they price into these loans can reduce, and then the cost of loans also reduce. So we decided to do this to basically make it possible for lenders to lend more comfortably, make it easier for people who also are taking loans to have some form of backup plan, right? In case things don't work out as they had planned. And that's why we went into it. And like everything we do is powered by technology. And that's why we went to tech approach to simplify it to such an extent as it's plug and play for everyone.
Thank you, Debo. So it's safe to say you also fall into the category of problem solvers, people that identify, oh, this is a possibility. If I make this available, it solves a lot of problems, which in turn also solve my problem. Then you jump on it. Then that's good. And that's interesting. What would you say has been the adoption rate for this compared to what you thought? I don't, like I mentioned as well earlier, not everybody embraces insurance. If you count how many cars we have on the road, other than that one they do with the government, nobody is doing the comprehensive insurance for their car. They don't even, well, all the buses don't have insurance. That one's for start, and then there are lots of them. So what would you say has been the adoption rate for this across for businesses, for lenders as well?
So I would say the adoption rate has been good, is improving, can be better. And when you look at it, I always say that everyone does insurance, whether they are aware of it or not, right? Because insurance is basically risk mitigation. You can decide to transfer that to an insurance company to then underwrite that risk for you, or you can decide to use your savings to insure yourself, right? But either way, you are doing insurance. Everybody Everybody does insurance. If you have a car and you don't have car insurance and you're in an accident, you take out of your savings, maybe money that you should be spending right about now for 30 December, and you then use it to fix that car. So you've insured yourself unknowingly. If your niece or relative calls you to say, oh, they are not feeling fine, they need to take them to the hospital, and you send money to them, that means you are their insurance. You are the one that is insuring them. So because when they are in need, they call you. So you are an insurance company to some people. And the the communal life that we live, which is great, has built in this insurance thing. And that's why everyone who wants to be smart financially and responsible financially must have insurance, right? Because then you are transferring that risk. Imagine having an accident and you have to cough up ₦1 million or 500,000 at this time of the year. It can be somehow. So, but I would say that adoption is improving, right? Particularly from a business standpoint. So a lot of businesses are now because what we have found is there are a lot of innovators who are looking to lend to people who typically the traditional banks will not lend to, right? Because maybe they don't have that lending history, they don't have strong financial statements and track record. And these innovators need some form of comfort. They need something to sort of cushion that burden that they are taking on. And the society needs them, right? Because without them, what happens to that small trader by the roadside who's trying to build a business? What happens to all the mom and pop stores? What happens to even the people who are building tech? Because not everybody will get to raise. At some point, some people are getting finance, right? So it is important. And I see that from a business standpoint, many more people are beginning to adopt insurance. Many more people are beginning to say, okay, particularly when you're not including risk that either though were not covered, they're open to the idea of taking that up at least to protect themselves. On the individual side, it's a bit slower than on the business side, but that's the work that we are doing, right, to drive adoption, to get people to see that it is a big disservice to yourself to not have insurance at all.
Okay, so just to chip in here, which aspect of the insurance are people picking up more? Is it more or less the health insurance? Is it the business ones or is it more like the property ones? Which of the insurance are you able to get personal? Because you've
Okay,
mentioned that,
so
yeah.
from an individual perspective, we've seen people take health insurance more, right, than
Hmm.
other type of insurance. And I think there's science behind that, right? Because, early in the year, a lot of pharmaceutical manufacturers left the country. The
Mhm.
prices of drugs have skyrocketed. So even self-medication is expensive at this point, right? So you need to get some form of insurance, right? Today, for instance, we on our platform have health insurance plans from as low as 2,000 naira a month. Now imagine someone who is able to pay 2K and has access to see a doctor to, get specialist consultation versus trying to go to the pharmacy to buy a malaria drug, which you probably will spend that same 2K or more, right? So because of where things are now, price-wise, I think a lot more people are now open to the idea of getting on an insurance plan. So I think on the individual side, health insurance is perhaps the insurance product that people are acquiring the most. The second one we've found is device insurance, so phone insurance. So again, now because phones are very expensive, and if your screen breaks, it might be 700,000 depending on the phone you are using, right? So and you can insure that phone for maybe 50K, right? So people are now also taking that up a lot. But from a business perspective, right, we found that yes, so businesses of course are getting health insurance for their employees, but businesses in the credit space are now looking to credit life insurance a bit more, primarily because, like I said, if you look at so when you look at all the economic factors at play at the moment, it increases the chances of default, right? It increases the chances of people not being able to meet up with their obligations because some businesses might have to lay someone off. So if they lay someone off who has a loan, how does the person then pay if they're out of job? And in that case, if you have a credit life insurance, it then protects you, right? If someone's in an accident, look at the state of all our roads, and someone is in an accident and as a result of that is incapacitated and cannot work and as a result cannot pay you, then what happens? If someone takes a loan to buy goods and then the goods are boggled or it's caught up in flames and as a result cannot sell the goods to pay you, what then happens? And all of these are catered to by the insurance policy. So I would say from an individual, health and device, from business, of course, they tend to cater more to their assets and their staff as well, but specifically for fintech. So like buy now, pay later companies who sell phones and you are paying installments, they are taking credit life, they bundle it into the price of the devices, and we have a number of them as customers. So when you buy a phone from them, you're paying over 2, 3, 4 months or however long it may take. They bundled credit life just in case something happens. They bundled device insurance just in case you break the phone, and you need to fix it. So the money you use to fix it, use to pay our loan for you, right? Sort of
Exactly.
just that we have.
So I time it was and something thousand naira. I was able to get like a brand new iPhone, not a fairly used one, and all of those things. But by the time it was time to buy the next iPhone the next year, iPhone was now around like 600K, which was still plausible. Like
Affordable.
everyone, everyone could afford that. The year next, I had like more than over 1 million naira to get a phone. At that point, I knew that if the phone now drops off, we know very much. Then they now made it even interesting that both the front and the back can crack.
It's now glass. Yes.
So you better know the way to an insurance company to insure that phone, because the minute it drops, you have both your front and the back side of the phone to fix, which is going to cost you a lot. And it doesn't come cheap. And therefore, those are using Samsung, that their screens are not everywhere. Those ones, they guard their phone with their life. You do insurance, you do screen guard, then you put it in a pouch that is bigger than the phone, just so that even if anything happens, your phone is also very, very secure. Even if it drops from the sky, the phone is also very, very secure. Now today we're dealing with phones that are like 3 million naira. Just
Absolutely.
in fact, they're not even changing everything. Before you thing with an upgrade in terms of the OS, and then maybe just move the camera to a different position, and you're getting the exact same phone, a higher amount. It's multiplying every day.
It's
So what
consumerism.
now, ordinary Nigerians cannot be buying an iPhone, right? Phones are now seen as a luxury. In fact, if you I feel for the people that used to buy a lot of phones for employees, then or end of year party, they're giving gifts and you have all of those things. You can't even do all of that right now. So
Mm.
the adoption rate, yes, and for the fact that Nigerians don't even believe in insurance, so it's even going to be difficult for you to convince them to actually do all of that. But it's good to hear that companies are up to speed in terms of insurance as well. So I will take one question. I have another question that are coming, but I just want to make sure that I cover a bit from the slide. How does credit life insurance help lenders better manage the risk of loan defaults?
I mean, I think I touched on that earlier on when I was describing it, right? So primarily the work, one of the key things the lender does is risk management, right? Is to look at, so if I want to give Grace a loan, who is Grace? What does she do? What's her age? In the credit analysis, they talk about credibility, capacity, and all of that. So is she able to pay? Does she want to pay? Does she have the capacity to pay? And I look at all of that and I sort of determine, transaction history, how does she make her money? And I can sort of, assign a level of risk to Grace. But all of that is data science is very interesting. But what the things I can't factor is how long Grace will have a job for. How long, Grace will stay in the state of which I had met her, right? So credit life helps primarily lenders reduce their risk, right? Particularly for factors that are out of their control, like death, right? So if someone drops dead, they actually want to pay you. They have the capacity to pay you. So they are the right candidate to lend to, but they died. So what do you then do, right? Do you write off the loan? Typically, in that instance, yes. Because if you say, okay, they provided some what they call them, guarantor, you have to chase that one that, it's neither here nor there. Might work for you, might not work, right? But if you have a credit life insurance policy, that's your first point of call, right? Or length dispensing money, the person is no more, the outstanding balance is X amount, and then you get your money. And the person might not die. The person might be critically ill. They developed cancer, And when someone has cancer, the last thing they are thinking of is loan. They want to stay alive, at least give themselves a fighting chance, right? So they spend money. We all know how that can be. So in that instance, what's your recourse? Again, credit life insurance. If they lose their jobs, right, they got laid off, and we've seen a lot of that happen this year in particular, where big companies have downsized and all of that because of the economic realities. So if one of those people, was owing you, they've lost their job. What do you do? Credit life insurance, right? For those who lend to small businesses, um, we've heard of all the fires in stores across the nation, right? And the goods that they bought, you finance their goods so they can sell the goods and then pay you with their profit. Now the goods have been burnt. How do they pay you, right? Credit life insurance. They were boggled. Someone came into their store, stole everything. How do they pay you? Credit life insurance. So when you look at that entire benefit list that I just rolled out there, lenders have multiple protection points, right? So you can safely lend to small businesses now because you know that if anything goes with the goods, you have some form of recourse. You can lend to people in paid employment because if they lose their job, you have a form of recourse. And then if people die and the like. So I think that for insurance, first, beyond, it helps them, one, reduce the risk of default, right, by providing so-called um, in all these instances that I mentioned. And secondly, it can also help them reduce their rates, right? So because essentially interest rates are a reflection of risk, right, in the society, cost of fund, risk, and other factors as well. But risk also plays a significant part. If loans are guaranteed, the interest rate will drop. If you know for sure, like if you have like a government-backed loan where regardless of what happens, someone will pay you back, you are likely to charge a lesser rate, right? Depending again on a number of things, but it's also one of the things that go into the mix. So all in all, it's a good tool for lenders to be able to manage their portfolios, offer even added value, right, to their borrowers, because you also know that okay, if this happens, at least that freedom of that burden of the loan is off you, right? You can then figure out how to get a new job, what to do with your life, as against someone chasing you up and down to say, I know you don't have a job, but pay me my money, right? So I think that's how it helps.
Okay. Thank you very much for that response. So in Nigeria, we know that insurance is below like about 2%. What do you think? I just even want to understand if from your experience you've gotten to find out what is driving Nigerians from not doing insurance. Is it just ignorance? Is it faith? Is it religion? Or just stubbornness? There is the other aspect because compared to outside of the world, you see people really, really rely on insurance, and everybody. I mean, that's where they even have more of insurance fraud because everybody's trying to defraud people from using insurance. Insurance is almost like a go-to for every device or every technology or every property that they own. So, what do you think in your experience? What have you gotten to learn about what's driving that train of thought?
That's a very interesting question. It's a mix of things, really, right? So there's religion. Everybody is protected by the blood of Jesus, right? Which is a great thing, right? But faith without works is dead, right? So I think there's a religious part of it. There's also generally a lack of understanding. I think people see insurance as, they don't see it as part of a financial activity. And the way I put it, for those who understand football or who follow football, they will understand this analogy. If you go to a football match, right, you have primarily three areas of a team. You have the strikers; those are the guys who score goals. You have the midfielders. These midfielders, they support the strikers to score goals, and they support the defense to protect you from conceding goals. Then you have the defense that primarily stop your opposition from scoring you, right? And those are the three major departments in a football pitch. Now, in life, the strikers, the ones that score goals for you, are your investments, right? Because that's how you become rich. That's how you come out of poverty. You work, right? You get money, you invest, whether it's in money, in stock market, it's money market, is in business. So those investments are your strikers. Now, remember I said that your midfielder support your strikers, right? So your midfielder is your savings. So you take out of your savings to invest. So your midfielder is supporting your striker. Now, if you are in an accident, like the example I gave earlier, and you don't have insurance, you take out of your savings. So your midfielder goes to your defense. So you take out of your savings to fix your car. I mean, if you are healed, you take out of your savings to go and treat yourself. If your device gets bad, you take out of your savings, to repair it. Now, what that means is the more money you take out of savings to fix car, to treat illness, to fix device, the less you can give to your strikers. And this is not a surprise that Africa is struggling to build a wealthy continent, right? Because people are spending most of their money defending rather than attacking, right? Investing in their growth, investing in getting more knowledge, investing in businesses, investing in money market and stock market. Now, your defense is an insurance plan. So if you have an insurance plan, for instance, you have a health insurance plan, what it means is if you are sick, rather than taking your savings to go to the hospital, you walk to the hospital, show them an HMO ID, they treat you, and you come home. If you have an insurance plan, if you're in an accident, you call your insurance company, they fix your car. The money you would have taken from savings to fix that car, you put it in your investment, so you become richer. If your device goes bad, the money you would have taken, you just call your insurance plan. So people not having insurance is like going to a football field and not having a defense line. No goalkeeper, no central back, no left back, no right back, just midfielders and attackers. And no matter how good you are going to lose that game. And that is why most people are going through life losing the game of life, right? Because there's no defense. There's no defense. If you are the breadwinner of your family, and we've seen instances of that where people die, and then their families cannot maintain the lifestyle that they had, right? And so you have put not just yourself in a bad place, but the generation after you in a bad place. So I think it's a lack of understanding of that insurance is part of the game of life. It is part of how you win in life. Insurance is not an afterthought. It's not something that you think of. Oh, okay, let me. It's a part. If you're and now phones, people eat off their phones. They eat off their cameras. Freelancers, laptops. So you spend 3 million naira to buy a laptop, and then you are drinking coffee while working, maybe because you've been working late, and the coffee spills on it. And then the next thing they say the motherboard is bad or whatever. You need to buy a new tablet. If you had insurance, they just fix it for you. And whatever money you've made, you can use it to do something else. In fact, if you don't even want to invest, you can help someone, in your family and do something else with it rather than spend that money to repair a device. So I think it's a lack of knowledge. Having said that, the blame is not entirely on the people as well, right? The industry also has to take some responsibility in that how have we positioned our products in the past? How have we served the customers in the past? Because a lot of people also have apathy because they've had bad experiences with insurance companies. And that's why we have introduced technology. That's why we have introduced strong operational processes to help people navigate those difficult times easier, right? So on our own part as an industry now, the industry needs to do better to educate people, to let them understand that insurance should never be an afterthought. Insurance is a financial, the same way they tell you, once you work, you must save. It's the same way they should tell, once you work, you must have insurance. Once you are alive, once you are breathing, you must have insurance, right? It's the same way that message must be preached. And there's a whole lot of work that must be done by the industry to educate people about insurance as a whole.
Thank you so much. So while you were talking, I could remember the time that I lost to insurance like very well. So I had a scenario where of course you've gotten a car, you paid your insurance. It's a new car, so you won't even miss paying insurance at that point. I renewed the car insurance the second year. Then the third year, I was like, let
Nothing
me
has
not
happened.
do it. Nothing has happened,
Mm.
right? Nothing has really, really happened. So next quarter, I'll just pay. Actually, I missed the date, and then I realized that I missed the date and nothing had happened. So I now didn't pay for it. Then the next month, I still didn't pay for it until someone decided to help me go buy water. He wasn't even going to do anything important. And the next thing I got a call. hello, you need to come your car. And I'm like, oh Lord. um I got to learn the very, very hard way. And now whether I have my car has been bashed or not, insurance is a must. I don't even joke with it. I'm paying upfront and then renewing upfront so that there is no talk. I didn't even enjoy insurance in the sense of HMO until when I found myself having to, oh, you can actually go check your eyes and not pay. You can walk into a hospital, get treated and not pay. So for me, I am an insurance person. I'm going to take a few questions because of the time from the audience. So please, Grace, can I see the slides? Favor, I hope you can see the slides now. If not, don't worry, it will be shared with you. What insurance companies actually provide the insurance cover? Deborah, this is you.
Okay, so today we work with about 15 insurance companies. There are 10 of them on our infrastructure, and all the big guys are there. So think AXA, Allianz, Sanlam, ICO, Leadway, STI, right? So yes, we work with all the big guys and the up and coming as well, right? So yes, they are reputable organizations that provide insurance.
Okay, so the next question, what's the insurance claim process? Are we facing Lendsqr or my cover AI when we need to make claims?
So what the integration allows is that you're able to report your claim via the infrastructure, right? So that's the whole idea. But then the operational support is from mycover.ai, because Lendsqr's business is to give you infrastructure to be able to lend your loan, do your loan business easily, while we are providing the claim support behind them. So for claims, that's powered by us, but you can still channel it through the infrastructure.
Okay, so another question is, as a lender, how can I integrate with my cover AI, or can I use Lendsqr to over insurance under my cover AI? So it's a combination of both.
So the interesting thing is the way we've done it.
Mm-hmm.
Lendsqr has integrated into mycover.ai. So
Mm-hmm.
once you use the Lendsqr infrastructure, it's just selecting a few buttons and you have it. You don't need to do any integration. Once you're on the Lendsqr infrastructure, and that's the beauty of technology. When we talk about access, it's use cases like this, that make the point for us. Like on Lendsqr's infrastructure today, you have access to credit life, and there's no need for any integration, right? It's just selecting that option as one thing you'd like to offer. And then the beauty of it is a bunch of benefits. So if you lend to people in paid employment, there's job loss. If you lend to people, to small and medium-sized businesses, there's fire and mortuary, alongside all the death and code that covers everyone.
Okay, so this other question again for you, what's the average cost of the credit life insurance as a percentage of loan disbursed?
So it typically depends on the risk that you're covering, right? So if you're covering job loss, again, like I said, this is why I love this partnership with Lendsqr a lot. It's made it modular. So whether it's, if you're doing death, so we have some partners that are just doing death and loss of job, right? Those two items, I think, if you were the entire thing. But I think on the actual base, it can be 0 points depending on the items that are selected.
Okay, so I'm going to take another question from the audience. Operating in a digital space may pose an issue in getting the death certificates of a borrower. How can this be handled in processing claims?
So part of the requirement for making a claim on making a death claim in the case of in credit life insurance is a death certificate. Typically, the first answer would be yes, try and get that, because again, you're looking to protect the underwriters themselves, right? To say, okay, this person is indeed dead. What is the proof of that? Does the person just abscond and say they are dead? Or so we need that proof. We've found ways around it in instances where the certificate could not be gotten, perhaps because maybe traditionally the person had to be buried, or a number of reasons, and we've used other means. Sometimes I think we've used photographs. In some instances, we've used quite a number of things. The most important is to be able to confirm that this individual indeed is dead, right? So But again, I think one of the things we have found to have worked for us is letting people know beforehand what is required to make a claim. So everybody sort of in their mind have an idea of if I need to make this kind of claim, this is what I need. If I need to make a claim of critical illness, I need a medical report that backs that up to say, okay, this person is critically ill and cannot walk, right? So knowing that ahead of time sort of
Okay.
softens the effort.
Okay. So we all love what my cover AI is doing, right? But from my experience, partnership with financial providers has actually been very, very hard. I am at some point right now we are with a situation where if we want to do any partnership, we always have to look at what is the benefits and what's the effort before we even go into it, just so to ensure that we are not also wasting everybody's time. So I just want to find out, how did you guys do it? And what would you want to say to lenders who are planning like any type of technical partnership? Because it couldn't have been that easy. We are just talking about it being all smooth, but how did you manage all of those partnerships?
So when you say partnerships, now do you mean partnerships with insurance companies or partnerships with like Lendsqr or just
Yeah, with like a Lendsqr and also with the insurance company.
so with like Lendsqr and tech, it's a lot easier, right? So one of the things I have found, right, partnerships are easier when one, it is important to both people. So by both people, I mean both parties, right? If both parties really want it to work, it will work. And that desire for it to work must come from the top, right? So
Okay.
in our own case, right, Deji, with Liz Lendsqr, wanted this as much as I wanted it, right? So got on a couple of calls. Rebecca was very instrumental, very professional in getting things done. And because we both wanted it, we both understood. So Lendsqr on one hand wanted to offer more security for lenders that use their infrastructure. Lendsqr wanted to make it easy for them to be able to access that infrastructure. So they said, we'll take the burden of integrating with you. So for them, it's just, plug and play, right? And we've seen the magnitude of that interest also matched it, right? And provided all the tech support. So I think, and to be sincere, and this is not because I'm on this call, this is one of the easiest ones we've done because again, there's a mutual desire to see it work, right? With the insurance companies, is a bit more difficult, right? Because you then have to, and like I said, it's a desire, right? So tell them why what you're doing is important, and more in the early build this where we have tells and show how what we are doing is important. But today, the reality is insurance companies now come to us, right? Because they see there's value there. We've been able to prove ourselves over the last couple of years. We've gotten business in. We've used technology to make it easier for people to enjoy and access insurance, right?
Okay.
So it's easier on that front. But yes, partnerships for me struggle when it is not important to both parties. If it's important to one person and not the other, then you will struggle. But if both parties want it, then they'll make it work.
It has been important to both parties, but it's just been more or less like maybe as some people, it can be important to them, but they're not serious.
Then it's not important to you. I'm serious. So let me give you an instance, right? If it's important to you to go for a meeting, so it's a job interview, right? If you are jobless and there's a job interview, if it's important for you to get a job, you will wake up, you will go to the traffic, you will get there, right?
Early.
Yes, early. But your friend says, come and greet me on the mainland. If you don't feel like it, you're like, there's traffic. But that same traffic was there when you were going to look for that job. That same traffic was there when you were going to try and get that money from your business or whatever it is. But you braved the traffic and you went there, right? So for me, it's that level of importance. There has to be, maybe another thing I'll add to it is shared value, right? So for us, we are very particular about our customers, very particular about it. So if the business you're also trying to work with does not share that same value, right? So values around maybe integrity, customer centricity, and the likes, if they do not exist in that partner as well, then you might struggle. The work ethics of the people in the organization, right? So if we are, and I referenced Rebecca while I was talking, right? She was very professional, and it was easy for her when people to also match that because I mean, imagine if you send an email to someone and the person is responding 4 days after or 5 days after. It makes the work difficult. Again, because they probably don't want it as much as you do, right? So if both parties want it, both parties care about their customers, both parties care about the excellence and integrity and the dignity of labor and just doing the right things, then it's easier for people to collaborate and get things done.
Well, from this conversation, I've gotten to even learn more things that makes us, will I say, share like minds in common in terms of how the company operates and all of it. Customers' perspective or putting the customer in mind is actually key. Most people build and forget that they're building for their customers, and it's their customers that need to be satisfied for you to actually say, I have a successful product. So that part as well, you would go to a place and then you would see that the business is actually thriving very well. But then again, one waiter or one attendee or one person just comes and ruins that experience for you. And unfortunately, the business owner might not even know what the person has done. So now in this instance, imagine if Rebecca wasn't replying emails. So imagine if Rebecca wasn't replying emails in time, and we probably won't be having this conversation. So we've run out of time. We just have about 4 minutes, and I wouldn't want to keep anyone beyond the time. So we would answer everybody's questions and just send it to them when we're sending out the meeting recap and all of the documents. So I'll just take one question so that we can just round up and close. Okay. Insurance in Nigeria is full of stories when it's time to pay. How is this different from a conventional Nigerian insurance that is full of insincerity and lack of integrity, looking for flimsy excuses not to pay the claims? You spoke a bit about this initially, but I'll hear from you.
I think so. I'll speak very frankly on this. I think that a number of things contribute to that, right? One is a lack of transparency. So many people get insurance policies and really do not know the details, the clauses around their insurance policies. So I'll give you a very simple example. Usually, when you buy things like comprehensive insurance, device insurance, goods in transit insurance, fire and burglar insurance, there's something called a deductible or an excess, right? And deductible or excess means that the portion of the claim which the insured now being you, will pay in the occurrence of the claim. Now, it's usually a percentage and in some instances a fixed amount. So let me explain. If you say you have maybe device insurance, some people might say the deductible on it is, say, 20% or 10%. Let me use 10% so it's easy. It's 10% or 50,000 naira, whichever is higher. What that means is that if you have a claim and it's less than 50,000 naira, the insurance company will not pay. Because that portion of the claim is supposed to be borne by you. It's a deductible. Yeah. If you have a claim of 70,000, it means that they will pay you 20K because you are supposed to bear 50K. If you have a claim of 350,000, then they will pay you 300,000 naira. So first thing is, a lot of insurers do not make it clear to the people at the point of purchase to say, look, this is a deductible on this plan that would apply if you have a claim. And the insured then needs to say, okay, based on this information, I do not want this policy or I want this policy. Now, question is, how have we addressed this? So the first thing we did is, so on our device insurance, on our auto insurance and the like, we first removed every deductible. So we don't do deductibles, right? So if there's a claim, the claim is the claim, right? And in the instance where maybe some policies and there are even some GIT policies where we've taken away deductibles, but there are some policies that we have deductibles on based on maybe the peculiarity and the risk levels. We communicate them very clearly. We remove fixed amounts from it because fixed amounts are always an issue, because fixed amount means if the claim amount is low, you might not get paid at all. So for instance, in the 50K example I gave, if your claim was 50,000, with a deductible of 50,000, you will not get paid. But if it was just 10,000, if it was just 10%, at least you get 45,000 naira, right? Yeah. So in those instances, we first primarily removed deductible. So on our consumer products, so like auto insurance, health insurance, not health, device, laptop, all those kind of things, we've removed deductibles. And that's to make it easy for people. Yeah. But even when there are clauses, transparency, this is what it entails, so that you understand what it takes.
Thank you. Thank you so much, Deborah. I really did enjoy the session. Thank you for
You're
that.
welcome.
So that I don't keep anybody, even if it's a minute beyond the time we're supposed to be here. Thank you so much, everybody. It was nice having you. We're going to answer every other question in the brand materials that we're going to be sharing after all of these. And enjoy the rest of the day. Thank you and goodbye. Goodbye.
All right.
Goodbye,
Thank you.
everybody.
Thank you, everyone, for your time.
Thank you.